show. Today's title is not at all indicative of what we might be talking about today, but I thought it was sort of an interesting headliner, so I just threw it up there. I had this lofty vision board goal of a super luxe fire life where, and I think this is sort of the ultimate level of freedom, is reaching this sort of goal of $100,000 per month. That, in my opinion, is the ultimate. Wait, are we live? I think it's frozen. Someone jump in and tell me if we're live. I think my counter is frozen, so I will preface this stream with this. I went in a pool 2 nights ago with my phone in my pocket, and my phone is fried, so I'm using a piece of junk old backup phone that I have, an old iPhone 6S, just trash. So super laggy tonight. Hopefully you guys can hear me and see me. It looks like it's going okay. I just spent the last 2 hours. I'm in a super down mood. Just spent the last 2 hours with one of the property manager guys that I have, who's collected, I don't know, over $30,000 in rent and hasn't brought it to me. It's theft, but they've spent it and now are trying to argue that, trying to figure out a plan of resolution, which is good. It's commendable that there's a plan to work out the deficit. But this is the human element in real estate that I don't like. In business in general that I don't like is humans suck. Like, so many people suck. They're just liars, unreliable, thieves, incompetent. Incompetent's a big one. A lot of people are incompetent in this world, and it really pisses me off how many people don't know what they're doing. And if you can get somebody to do a job as 50% as well as you can do it, that's something you should be happy with, is what I've sort of discovered. The large majority just clock in, clock out, don't care. That's why running businesses should pay so well. That's why doing real estate should pay so well, because it's high stress, high effort. Therefore, you need a good return for the risk that you're taking and the amount of effort that you're putting in. So, super discouraged this evening, having gone through that. Not that 30,000 it's a good chunk of money. There was a time where after tax, that was what I was making my first year sort of working full time. So it's not an insignificant amount of money, and that it is a significant amount of money. And the worst part is I have tenants living at properties who have paid rent, and it feels bad that they paid rent to someone and I never got that rent. So the landlord never got the rent. So I'm having people stay at properties for zero. Yay! And it's not even passive. Real estate is not passive. That's a myth. Anyone who says real estate is passive is lying to you. Even with the best property managers, I've never seen it. You're still on the hook. You're at the end of the day, you're the one that's accountable. You got to pay all the bills. You got to deal with all the financing. You got to deal with selling it eventually and dealing with all that. And oftentimes, issues get escalated to you as well. So you're best case scenario manager of someone who's managing the property. So that is a large part of why my $100,000 a month dream plan goal, or not dream plan, I guess. On the vision board, I had $100,000 a month was like my goal to reach towards. I'm getting closer to that target, and it's achievable. I'll definitely get there. Maybe still in my 20s, and that's awesome. Like, I'm super thankful that I've gotten as far as I have. But we're gonna talk on the stream. Any questions you guys have, put them down below. Happy to answer any questions. We can talk about real estate. Just listed another property today. You guys know my personal plan is to de-stress and reduce the workload of the 7 businesses that I'm currently involved in. I'd like to be involved in a lot less and do a lot less. One of those is real estate, and I want to get out of that, get into the flipping side still, keep that business going, but the buy and hold portion of real estate, it just doesn't make sense anymore. The return on capital, return on equity is just not good enough to justify the return on stress. Is not there. It's just, for me, not a good fit. It was a good fit. I think, for a long time when I was, 19 with my first property, I bought my first property 8 years ago now, or 9 years ago. 9 years ago, I was shot. I think I offered my first property a little over 9 years ago. So I just closed on my first property, my first reno and all that kind of stuff. So it's crazy how far I've come in such a short amount of time. But got another one listed today. Super happy about that. I got a plan to list about 1 a month on average for the next 18 months to pare down. That will still leave me with a few properties. It'll still leave me with all my stuff in my corp, all my flips, but just paring down some of the personal buy and holds. A few reasons: the market's way up. Return on time is super important to me now. The risk, I think, in the current environment is not conducive to justify. There's some inflationary concerns, though inflation could be a good boon for real estate. It also has its side, what do you call it, detractors for someone trying to run a cash flow business, right? So it's just, someone just put a comment in and said, I agree that some professionals, realtors, lawyers, appraisers, lenders, property managers, etc., so forth, are so incompetent that someone drops the ball during the deal, which costs so much time and energy on our part. It's true. It's, when you take down a property, people are like, oh, you just bought a property, like, and then a property manager comes in, there's no work at all. But like, that's the farthest thing from the truth. The amount of hours you put in just finding a deal, then the actual contract negotiation, and then all the financing that goes into that to get the deal to the finish line, working with the lawyer, the appraiser, the mortgage broker, the realtor, maybe a property manager locally, maybe you're removing a tenant, putting a tenant in, all of that just to get the property started, to make your first dollar of cash flow. You're hundreds of hours in. In any other business, you invest that, and you already be up thousands of dollars before you even start. So real estate's one of those things where if you buy smart, you get a huge lift on day one, and there's a small trickle of profit, and then a huge lift when you sell or refinance. So I found that that's been my primary driver of wealth, right, has been the value add, buying smart and then adding value to the properties. It hasn't been the holding. Though I've bought for cash flow, and I did that because if we went into a recession or something happened, I want to have cash flow there to service all my debts. I don't want to be in a situation where I'm illiquid. And lack of liquidity, having no cash, is a real problem in business. And you don't want to have that in your real estate portfolio. So that's why I'm not a speculator. I buy for the cash flow, but I found that the cash flow hasn't moved the needle for me. One bad tenant moves out and crashes the place, and you've lost a year's cash flow, right? You get a huge lift from buying smart and renovating, and you can make 20 years of cash flow on one deal. Like, I've done deals where I've made 20 years of cash flow at once, and I just decided to flip it. And that's where I'm looking at my portfolio, and I'm like, this one pays me 9 years of cash flow to sell right now. This one we get a way better return on equity. And I looked through my list and I'm like, there's very few properties that make sense to actually hold right now in this market. Now, there are other markets I could go into outside of Southwestern Ontario probably that are better. There's some red states in the US that are more favorable. They have better market conditions for landlords. There aren't rent controls. There isn't a landlord-tenant board that's designed for the tenant to screw the landlord with adjudicators that are biased towards tenants. That sort of ecosystem that exists here doesn't exist in some places. There are places where you can raise rent. You can do a renovation and raise rent 50% if you want to. Here in Ontario, you could never do that. We have rent freeze. You can't do anything. So there's just not a good business environment to operate in a real estate buy and hold rental property. So that's another of the reasons that I'm getting out. But for sure, I think I'll still buy properties. You'll still hear me say I'm taking down, a few properties a year. I bought even a sixplex not so long ago. We may flip that. I don't know. I run the numbers and I'm like, could make sense to walk away. The way the real estate market's going, when I look at the numbers and like everything I buy, well, most of the stuff that I buy, especially if it's my personal name, is intending to hold. If I'm going to flip, I put it in my flip corp. But I'm buying for long-term appreciation, long-term capital gain. I'm focused on, a little bit of cash flow to service the debt, but really focused on, that long-term building of wealth. And when you get into a situation where, look at a stock or rental property in the same way. Stock goes up 40%. Now the dividend's paying you half as good as the yield has gone down a lot, right? And so you're looking at that, you're like, oh, maybe I should sell some of that off. It's up 40%, rebalance my portfolio. I do the same thing in real estate. I don't let emotion cloud my judgment. Anyone who tells you they hold onto properties forever, they just don't apply math to their portfolio. They don't use portfolio theory to manage the real estate portfolio. And that's a fatal mistake. I think that's unwise and unintelligent to do. Yeah, let's do some Q&A. Let's go there. Yep. Hello, Eric, Kevin. Can't wait to chat with you. Yeah, at some point I'm sure we'll connect. Kevin says, stop talking about how much it sucks and it won't anymore. Law of attraction. There's something to be said about, you ever read the book, The Secret? I don't know if you guys have. Talks about the law of attraction and how you can sort of manifest whatever destiny you want. There is some merit to that in the sense that if you're focused on something in your mind, you're more likely when you're sleeping to be problem solving on that. Like if I go to sleep, I'm thinking about Kim Kardashian and Kanye or whatever in my mind, or I go to sleep and I'm thinking about my rental property, project, and I'm looking for a solution, or I'm thinking about someone's problem in their business that I can solve. I wake up and I just made 100 grand while I was sleeping because I dreamed about a solution. That's literally how my brain works, by the way, guys. If you know me, you know that I stay up late all the time, Nighthawk. My brain can't turn off, and then I go to sleep and I sleep on my problems and I fix them. It's just one of those things where most people don't have that mindset, right? And I think that's a problem. People need to shift their mindset, right, and really dial in to that. So law of attraction, sure, there's something there. I think that you can manifest, what you focus on. It will happen. We have so much potential, and there are roadblocks along the way. But if you're focused on something, you will achieve it most of the time. I think that people often set goals that are too low for a 10-year time horizon, and they often set goals that are too high for a week or 2-week time horizon, right? Like, hey, in 2 weeks I'm gonna lose 50 pounds. Like, no. But in like 10 years, you could probably do that. You could put on 50 pounds of muscle or whatever you want to do. Like, if it's make $10 million or whatever, reach fire, you can do that in a 5 or 10 year period. There's no one in this planet, unless they have a mental illness or some sort of disability that makes it so that they can't work, barring those like exception, fringe cases, most people I can coach to reaching fire in 5-10 years. I've done it with lots of people with diverse sets of skills and diverse backgrounds, coming from nothing, coming from stuff, whatever. It's doable. You can follow a set of steps. It's not easy, but it's doable. And so that's, I like the law of attraction. I'm a big fan of the idea that you can manifest, what you want in your life. And mark my words, you've heard it here, that a couple years from now, 100,000 a month will be nothing. I'll surpass that goal, right? For a long time, when I was in my, late teens and early 20s, it was $10,000 a month. And now inflation adjusted, like that was like 8-9 years ago. So, I was in my teens, and my first year at Western, I was 17. That was, geez, almost 12 years ago now, coming up on. That's crazy. No, 11 years. I was in my dorm room in 2010. 2010, I was sitting in my dorm room, and I was, doing a little vision board and thinking about what I wanted out of my life. And 17-year-old Mike's sitting there thinking about, what he's going to do with his life. And at that time, I was manifesting a lot of things that ended up coming to fruition. I ended up achieving a lot of those goals. So there's definitely value in journaling, in writing down those goals and then making a plan to achieve them, and then revisiting that on a monthly cadence or quarterly cadence. There's definitely some huge value in doing that. So it's crazy. I'm gonna be 29 in this year. That's wild to me that I'm soon not gonna be my 30. I'm gonna be in my 30s soon. So I got a lot. I feel like I still have a lot I have to accomplish because I set lofty high goals for myself. But I've done a lot, and I'm proud of what I've done in such a short amount of time. But pride's a sin, so what good is that? Michael says, what is your advice when using new contractors to not get stifled? I think he means like shorted on a job, but at the same time be fair with them. Here's the challenge. There's a dichotomy, or like, what is it? Like two opposing forces coming together. When you hire a contractor, their goal is to do the least amount of work and make the most amount of money, right? They want to cut as many corners as they can to save time, which effectively saves the money. Or they want to charge, like there's three things. There's reliability, affordability, and quality, right? So there's the price you're paying them. There's how often they show up and get the work done in a timely manner. And then there's the quality of their actual work, right? The saying is you can never have all three. That's the rule. You never get all three. If you get all three for a little while, it's because you think you're getting quality and you're not, or it's because you think you're paying good price but you're not, or you've got the perfect triangle and then they find out, the contractor realizes that they're selling themselves short and they go on to another project or they switch industries. I've experienced many forms of dozens of contractors that I've worked with. My goal has always been have them give you a price that they're comfortable with, because then they've set a price with you, right? And maybe bring on like 4 or 5 people and get quotes from all of them and then compare. You can find out where they peg in the industry. And the only way to know their quality is to talk to references, but I mean, even that's not fantastic. The best way is to see them do a small project, and then you'll see how they work. And if you guys get along together and they do good work, and et cetera, so forth, and then have them tell you a price that's fair. If you want to check that price after you've built the relationship, you could bring someone on to do a quote at some point, and they can check the price to make sure that you're not overpaying now. But you eventually learn to know your prices. Like There are just general rules of thumb: price per board, price per box of mud, price per square foot of flooring, per linear foot of trim. I know all those prices just from talking with guys in the industry, and I know that a buck a square foot on installing vinyl click flooring versus a buck 50 a square foot. I know the quality difference I'm going to get in most cases. There are exceptions, but I know what I'm getting. I basically get what I pay for in most cases when it comes to reliability or quality and work, right? And sometimes it's okay. Like if it's a project that's not in a huge rush, I might pay the guy like there's guys I know that do 80 cents a square foot for installing vinyl plank, and they fly. They're fast. They have to make 40, 50 bucks an hour laying floor because they're that good. But they do cut corners sometimes, and so the quality isn't always 100% there. And on a rental, that's fine. The floor's going to get destroyed by students in 5 years anyway. So who cares if there's some imperfections along the trim or whatever, right? Like little things like that might not matter. It might mean more to save $1,000 on the installation and put that towards your cash flow. So it just depends on the project, right? For my personal house, I'm gonna get the guy for $2 a square foot that really pays good attention. That said, though, I have 3 young kids, so that's probably wasted money anyway. Put the crap in because they're going to destroy it anyway. Students, children, same thing. What's the best way to sell a property in a good location but that has a weird layout? Should I sink more money to update the layout or sell it as is? So funky layouts are tough. I have some properties with funky layouts too, and it depends. It's very situational. It's hard to say, hey, fixing the layout's going to fix this problem. It could be, a location issue. Some layouts really work in some areas. Some layouts in a student rental work really well. That same layout in a, luxury estate is not going to work. You don't want a bunch of bedrooms in a luxury estate, right? So it just depends on your target market, and it's very situational. Port says, how do I get my property number 3? I don't have down payment, so I need 90% financing. You gotta get creative. You could bring on a partner. You could borrow the money from private sources, private lenders, that kind of stuff. There's a whole bunch of ways you could get creative with vendor takebacks, or you could have a vendor finance the deal, part of the deal. At least you have 10% down. That's something. You'll have some skin in the game. But yeah, there's probably a way you could get creative with it. It depends if it's off market or an on market deal on MLS. If it's an on market deal, the realtors almost never want to deal with vendor take back financing. Very rarely do they understand it and want to deal with it. So more likely it's a private deal that you've negotiated and massaged with an investor or landlord that you've met, a networking group where you knocked a door. That's really the best way. Okay. I agree. Got that comment there. Eric says, would you still flip property at the current market? Yeah, Eric, I am putting my money where my mouth is. I am still flipping in this current market right now within my flip co. So yeah, of course, I'm buying stuff under market and I'm turning it around. And then instead of holding it, I'm just selling it. I like to buy property that I can also cash flow if I have to. If the world falls apart, most of my flips are geared to the investor. I do investment property flipping. The reason for that is in a recession where there's a huge pullback and no demand, I can hold and I can wait, and it's okay. I can service the debt. Whereas if you're flipping like single family houses and family stuff, typically you're targeting or luxury stuff too. You're stuck holding the bag in a recession, right? So it's not ideal. Next question was, have you ever bought a property with seller financing? Yes, I have. There's lots of ways to do seller financing. There are cashback deals. You can get them to pay for renovations after closing, which it's hard to enforce, and they may not come good on their word on those types of agreements I've seen done. Sometimes you can get creative with assuming their mortgage. You can get creative with a vendor take back where they provide a second mortgage on the property to help you put the equity up and you get a first at the bank yourself, or sometimes they'll provide the whole first mortgage and you just put the down payment down and then you're paying them a higher interest rate until you fix the property up or unlock its value, and then you refinance it and buy them out. There's lots of ways you can structure things. You can give them a percentage of ownership and they continue to hold parts of the deal. I've seen all kinds of cute structures done before. I've done a whole bunch of different cute structures with investors. A lot of deals I couldn't close myself. We at one point were closing like 9 properties in 1 week when I was in the aggressive 2019 buying phase. And early 2019, I was buying heavy a lot of properties, and I brought investors on that could bring the financing down, and we did structures like 30 to 50%, profit to me, and between 50 and 70% to them. Those were handsome, well-paying deals for the investor. They made lots of money. We had logistical logistical challenges too, though, with managing all of that too. So I'm not going to say it was perfect for everyone. There was win-wins all around. We had our challenges too, doing all that. So would I do it again the same way? Probably not. Probably not. The next question was, does Interactive Brokers work with Mint? I don't know. I have no idea if those two go together. Interactive Brokers is my favorite platform for stock trading and options trading. If you follow me on Instagram, I'm Mike Rosehart, you guys know that I post daily, at least business days, my current profit or loss for the day and some of the positions that I get in and out of. So I'm actively trading. I love trading. So it's, Ariel says, hey, wave to her. Hi, Ariel. My daughter's watching. I forget what I was saying now. My thought was, I lost my train of thought. Interactive Brokers, something about that. Anyway, love it. I have my referral code saved in my stories on Instagram under options trading. I also have it saved on a bunch of the videos in the comments 3-4 videos ago. This phone's like locking up, so if it turns off, guys, it may just freeze up. It's an old piece of junk phone. Hopefully my phone, I tried firing it up before the stream just to see if I could get it to work, and it had water in the screen still, so it's not looking good. But for some reason, the water strip hasn't gone off red yet, so the water hasn't gotten all the way through the phone yet. I might be able to bring it to Apple after a while and say, hey, water strip hasn't indicated what's going on here. Next question. Is seeing yourself being worth $500 an hour one of the reasons you're selling off some of your properties? Leventhal, 100%. If I valued my time at $30 an hour, I would do all my own property management. Very likely. And I would set up good systems. But I see my time as being worth much, much more than that. And just by definition of how much my net worth is, I make so much before I even wake up. Like my portfolio while I'm sleeping is working for me. Why do I want to work? I don't. And rental properties are work. Even if you have a manager, it's still work. So you guys stay tuned. I'll be selling off a bunch of properties. One hit the market today. If anyone's looking near Western University, between Fanshawe and Western, right east of downtown in Woodfield area, I just listed a duplex. We just did a duplex conversion, made it a legal duplex with a permit, everything done, 2021. It's listed for $499. So check that out. If you're interested in a duplex, it's got decent cash flow. You could house hack it or whatever. It's hard to find. I think it's going to be, in 2 to 3 years, I think it'd be really hard to find any properties in good areas like that that are detached with good parking, etc., and legal for in the 400s. You're not going to see it anymore. So I think buying anything in the 400s, and this probably will sell in the 400s, is a good opportunity. So yeah. Next question was, what's your yearly return on the stock market, and can you consistently beat market returns? Well, statistically speaking, hardly anyone can continually beat the market. It's very, very hard to beat the market continually. Warren Buffett and a handful of other select investors and funds have done it. Net of fees, very few investors beat the market. I am currently beating the market, but that is not to say that over the long term I expect to beat the market. I don't. I'm lucky right now. I know that eventually I will lose out to the market. My strategy now is to take positions that I already want to own, get them at discounts, and then sell covered calls on them, which gives us some of my profit, but then also provides me with additional cash flow on top of the dividend. So I like running the wheel. It's been working for me. I only sell covered calls on the high up days on the positions of my portfolio, and I only sell puts on the down days. I do spread trading. I do protect my downside. I don't like the unlimited risk. I like to do covered positions. It's been working out very well. It's very tax efficient if you're an active trader like I am and running a business at it. I'd like to make it into a full business with a staff member that's helping me execute trades and doing research. I want to build a little firm, but with just my own capital. From a tax perspective, there's some advantages to that. And I'd like to go on seminars and expand my knowledge and just travel the world and then trade on my phone and trade on my laptop and just enjoy myself. That's what I want to do. I enjoy that. That lifestyle fits for me. I can turn it off in a second if I want to. Whereas rental properties, I can't go on vacation and turn it off. As soon as I book a flight somewhere and get on that flight, that's when the toilet floods, that's when the fire starts, all that crap. Like I've had everything from house fires to floods. I've dealt with all the crap. It all happens. If you do enough real estate at scale, all the crap, you go through it all. I've had shingles blow off roofs and tornadoes. I've had all of it. It's city issues and fractions and every issue you can imagine. I've gone through it. So yeah. Ooh, Randy says, super chat, $20.99. Thank you. Have you guys noticed that I've turned ads off the channel? That is because I've unmonetized all of the live streams. YouTube still sometimes puts a stream or an ad in, but I have them turned off completely. So I make nothing. YouTube sometimes still tries to monetize, but you notice I have no ads at all set up. So, what is your experience with Burr and being completely hands off on the renos? Yes, it costs more, but maybe there's other not obvious things you can learn, not by experience. Best way to succeed, hands off. So the secret to a Burr is good management. It's more important, or as equally important as the deal. And I used to believe it was just the deal that was everything, but it's not just the deal. It's definitely good execution. I've watched people take good deals, take forever to renovate. I've seen people do Burrs that take a year and a half. And a year and a half renovation in a flat market or a normal balanced market will crush your Burr. It will be terrible. So I've seen people do the work themselves and take a year to do it. That's a failed Burr. That's an execution failure, right? And that execution failure could cost you, with holding costs and opportunity costs being as high as they are, could cost you most of your realized profit. I know someone who I know a family member of mine who bought several properties and sold them for double 2 years later and still lost money. So it's possible you can buy smart and still lose money with bad management. High trades costs, you can run into crap along the way, high carrying costs because of bad debt structure financing. Lots of things you can mess up along the way with a Burr. And through experience, I've learned that too. I've been fortunate that most of my deals have been very profitable, but I've also been fortunate that I've been investing in a market that has been booming straight up for natural market appreciation. So even when I messed up, the market kind of saved me. So just because I have an amazing track record doesn't mean that I was amazing on every deal that I did. I've made a lot of mistakes along the way too, and high rental costs is a big one. The safest thing you can do, I think, is, and where I see most noobs make their mistake, is not running their numbers properly and thinking they can get a renovation done for 30 grand on a property when it takes 100 to get it done, and then thinking carrying costs will be 5 grand when your carrying cost not is 3 grand a month and it takes you 10 months, it'll be 30 grand in carrying costs. And then they don't factor in that all the unknown things that are going to pop up along the way that'll creep into your profit. But the biggest thing is I think starting, if you got the management down, you understand how to get involved, and you got to watch the project. Like if you outsource everything, the contractors will run all over you. If you do it multiple times, they want a taste, they want profit, so they'll find ways to milk you for as much as they possibly can, especially if you don't understand how to do renovations. So keeping multiple sub trades in is key. You want to have different people bringing in there's expertise and looking over the person's work before them, right? So the drywaller is going to look over the framer's work, and obviously you have if it's a big job, get a permit, and the city will look over everything for you and make sure that it's all done properly, right? So that's a big thing when you're starting out, is follow the channels, get a permit, do it properly, and then you won't get screwed by the contractor. But you can still get screwed on price and time. They'll delay it and do other jobs and whatever else, right? So let's see here. Yes, it costs more, but there's other not obvious things you learn by experience. Yeah, I think the biggest thing is buying smart. I think that the best way to do a Burr is to buy something 60 cents on the dollar. So if it's worth $500,000, I'm willing to pay $300,000 for that property. Those deals are unicorns. Wholesalers aren't selling those deals at those prices in this market. They're trying to get as much as they possibly can. I see wholesalers, a lot of wholesalers around here selling stuff at MLS pricing. I see MLS deals get negotiated down lower than the wholesale deals right now. So your wholesalers don't got the deals for you anymore. Most of them, if they're a decent wholesaler that's doing a lot of volume, they've got a good client base. So they're getting top dollar for all their wholesales. If this wholesaler has done more than 5 wholesales and has a good buyers list, you probably don't want to buy from them in many cases. You're likely overpaying. And overpaying's fine. Like, it's hard to get deals right now in this market. You can't find anything, especially a proper Burr. They're very non-existent unless you really stretch your ARV, you really push what it can sell for. Maybe you do some really nice finishes. You might be able to get something where you cheap out on the finishes big time, and you might be able to squeeze a Burr out of it. But this market, this appreciation, people bought properties from me last year that I sold, and I've seen some of them relisted for like 30% more than I bought them for in 6 months, and they sold. And I'm like, what? You bought a property from me 6 months ago at top dollar, and someone else bought it from you for more? So there's the greater fool thing where people act like they're geniuses, and they're literally, the market is just on fire right now. Like for a time, it was 4% appreciation a month. A month. If you're levered 5 to 1, that's 20% a month. That's a triple digit return annualized for doing nothing. So everyone who bought any property in this area is 100% not burring. They're just speculating and they're getting lucky, right? Um, just the market. Everyone's burring right now. Hey, another super chat. William, thank you. William Burkhead sent me AMC. Hi, Darcy, and thank you, Mike. So AMC, if you've been watching, has been sort of on a bit of a roller coaster ride. The volatility is insane. At one point today, it was like negative 12% or more. During the down bit, I cashed in on some of my bear calls that I had going. I was ensuring that the stock would not reach over 100 with a stop, of course, at 120. So my max loss was like $20 a share. I've been having fun with AMC a little bit with a very, 1% of my portfolio, just playing around. I made like 10 grand, just messing around with AMC. But I also did some bull puts too, bull put spreads on AMC at like $20 a share. So I may end up owning AMC at $20 a share, which, whatever, YOLO, like ride with the meme stocks and see what happens. I'm fairly sure that if I ever got assigned at $20 a share, that would be my cost base right now. That I could sell covered calls on it with the IV, the volatility right now, the premiums they're paying for the volatility. I can sell covered calls on AMC at $20 a share and make 5% a month, 60% annualized. It's insane. Of course, do not put all your money in AMC. If you put more than 1% of your entire portfolio into AMC, give your head a shake. It is turd. It is absolute dog turd. It has a lot of eyeballs on it right now and a lot of attention. And attention could turn the turd into maybe less of a turd. But it's a brick and mortar movie theater business that is trading at a market cap right now that justifies 100% of all movie tickets are sold for the next 10 years, and all concessions up to like, I think $70 a person average are completely sold out. That will not happen. It's selling at a multiple that is unrealizable. The company cannot deliver profits that justify the current price. It is disconnected entirely from fundamentals. Most of the meme stocks like GME, AMC, what are the other, BlackBerry right now, Bed Bath and Beyond. There's like 5 big meme stocks right now. They're just popping like crazy. I'm playing with it. I'm having fun. But I know long term it's going down. Not to zero. Like AMC has value. They're a great movie chain in the US. And I personally am a big movie guy. That's like my number one hobby is like movie critique and just like watching movies. It's one of my number one things I like to do. And, I believe that I think they'll come back post COVID. I think it'll be a good business. I think at $5 a share, and at one point it was at $3 a share. It was a buy. I was actually looking at buying shares of AMC. I didn't pull the trigger because whatever. I never got around to it. But I remember looking at it and thinking this is a good buy. In the same way that when I was looking at like Boeing, during COVID, I was like, this is a great buy. Looking at the bank stocks during COVID, I'm like, this is a buy. You can tell when something's a buy. AMC is not a buy unless you're going to speculate and gamble on the greater fool. And the greater fool is that you believe you can sell it to someone else for more. You're hoping there's a greater fool who will buy your shares. Hopefully it's a suit. It's someone getting short squeezed that is forced to buy your shares. But it's hard to predict the market. There are people out there who probably own huge positions in AMC back when it was $3 a share. They saw the value, they bought it, and they may sell at $50 a share. They may sell their shares to cover the people who want to buy for their short squeeze. The suits who are looking to buy, the funds looking to buy, there's going to be someone who's willing to sell to them. And the fact that the Reddit community thinks that they have enough buying power to forever, or more staying power than the funds do, is just not true. And it's just unwise. It's a game of chicken. And whoever's left holding the bag of AMC turd is going to get crushed, right? Like, it just is what it is. Could they take the attention and do a capital raise? Could they take all the eyeballs on AMC and all the attention and raise capital? They most certainly could. GME could too, GameStop could too as well, right? And take all the attention and all the capital that they now could get access to and do a capital raise. Take that capital and acquire a better team of people and increase their talent within the company, and then make strategic changes, like how we saw Blockbuster tried to make changes to online but couldn't keep up with Netflix and then failed. There was a time where Netflix and Blockbuster both had online platforms that were equivalently good. They just made bad management strategic decisions to not invest, and they didn't divest quick enough in the brick and mortar. Blockbuster could be Netflix right now. We could be all watching TV and videos on Blockbuster. Blockbuster platform, like BB or something instead of Netflix. I don't know. But that could have happened with better management in place. Blockbuster had a great brand and a ton of capital. So there's something there, I think, in the attention and the eyeballs, but definitely not these prices. Like, I'm 100% short AMC, GME, BlackBerry, Bed Bath & Beyond, all the meme stocks. Like, I do not believe in them long term. Will I play with the volatility? Will I have a little fun with the Reddit traders, maybe with a stop loss setup, do some spread trading on the volatility? Yeah, I might even join them and get some shares and do some covered calls on it and have some fun. I don't know. I have been doing that in the last couple weeks, and I've been having great fun trading. I love options trading. To me, it's a video game. It gives me that video game fix that I need, and because of my investor profile statement being very conservative, I know eventually I come back. You remember at one point I had 500,000 in losses. That's because my portfolio is huge, so that's not a huge percentage loss. It is a decent percentage loss, but that's all come back, right? Because I stayed the course and I continued to run the wheel, and things come back, right? And so I was overexposed to cryptocurrency, to be honest. Most of those losses were investments in crypto, which I'm, again, still bullish on. And long term, I know will come back, and it is coming back. Today was a great day, actually, for all of my crypto positions. So, yeah, Dogecoin, 100%. I agree with that. You don't want any of that dog coin. Stay away from that. If Brandon's watching right now, sell your position while you can. Don't believe you'll be able to find the greater fool. But you never know. Enough attention, right? Dogecoin could have some intrinsic value now. It started as a piece of dog crap, but it got enough eyeballs on it that it now has a little bit of potential to be developed into something that's not dog turd. Attention and eyeballs is money and power. Next one was, what's your yearly return in the stock market? Can you consistently beat the stock market? So no, you can't consistently. My yearly return, right now I'm just trying to sell options to generate a 2% a month return. So that's what I've been targeting in my portfolio without taking a ton of risk. So I've been very conservative, trying to stay way out of the money, not lose any money unless there's like a 10 or 20% or more correction to the positions that I'm holding, and try to just make around 2% a month. And even if there was a correction, it doesn't take very many months at 2% a month for me to catch back up. So the strategy's been going well so far. We'll see, right? We'll see. I'm up a lot right now in both my dividend portfolio, my capital appreciation portfolio, and my options trading portfolio. But who knows what the future holds? And I'm prepared for the volatility roller coaster. I try to smooth it out by buying as much options insurance as I can. And basically, you can use options to provide insurance. You may cap off some of your gains, but then you can stop loss by spreading your risk out with puts to protect yourself or whatever else. Eric says, I'm 21 years old and I have 50,000 in savings. What's your advice on real estate flipping for a newbie? I mean, it really depends on your goals, right? You could partner with someone, you could take 50 grand, and you could options trade. There's lots of things you could do. You could start a business, invest in yourself. That's probably one of the best ways when you get started is to invest in yourself, because that's the highest return at such a young age. Any knowledge you build now compounds. And remember, 50 grand now, when you're 21, if you just invested that like 1% a month return, right? Every, 4 or 5 years, you double your money. And so, you can do the math pretty quick by retirement. Even 50 grand locked away right now, you don't do anything else. Just lock that 50 grand away in a, a nice, investment vehicle, and let it grow, let it compound. And in 50 years, you've got a couple $1 million. So because you have so much money at such a young age, you're hugely ahead. I did the same thing. My first property at 19, because I, invested, I think it was 50 grand in my first property that I'd saved up, and then I grew that to 100. I was at such a huge base when I was so young that it was hard for me not to become a millionaire. Like, if you just work hard now and save, it's hard to go wrong. You can't not be a millionaire if you just follow these simple steps. The only way you go wrong is if you start spending. That's where you really get into problems, where you're spending more than you're earning, or you stop working and you keep spending. That's where people really get into problems. Learning on Matt's wholesale deals. So, yeah, I haven't really been following a lot of Matt's deals recently, so I don't know, but he has a great network, so I'm sure he's getting good prices on the properties that they're wholesaling, which is not a good thing for the buyer, but you know, he has a great amount of inventory. It's hard to find certain properties these days, and I'm sure some of the stuff he's selling has good value. I don't follow, so I can't comment one way or the other. But I would say that depending on the market, it can make a lot of sense to get into something that's under market value, and you could live in it and house hack. That's a great way to get started. Um, your first property, you could put 5% down, or you could find from relatives or raise capital to get the whole 20% down and avoid the CMHC fees. But if you can't do any of that and you can't find the money from anywhere else, yeah, one solution is to, simply partner with someone or do the 5% down. 5% down, it sucks to pay all the fees. Like, you're gonna pay 4% in fees up front compounded against you on a 5% down deal. So you put 5% down in the property, say 5% of 250,000 is, what's the math on that? Like 13,000 or something, plus closing costs. So you could buy, a cheap property and fix it up and live in it and house hack and rent rooms out and live for free. And then that's a win, no matter what happens to the price of the property. But at least you got in early, and if you held that property for a long time, then the 4% fee you're paying up front to CMHC, which in this case would be almost your entire 5% down payment, wouldn't be such a, it would be more palatable. I think it wouldn't be so painful. I signed up today and used your referral code. Thank you, David. Hopefully it actually gives me some shares. That'd be kind of cool. I haven't gotten it yet, but I'm excited to see if I get some. Hey, Mike, is it worth it to become a realtor from an investor's point of view? Varun, no, I don't think it is. If you're not doing, I think you're not doing 10 deals a year, it doesn't make sense to waste the time to get the licenses and then pay the between $5,000 and $10,000 a year just to keep your license alive. All the fees and everything else to your broker, it's a lot, right? You had to do a couple deals for free just to pay for everything. So I don't think it's worth it unless you're doing the volume. So yeah. Is it worth massaging the numbers in your tax filings? No, that will end you in jail or audited, which is a pain. Tell the truth, get a good accountant maybe who can give you legal strategies to be efficient and maximize returns. Next one was, at what net worth AUM should someone switch from real estate investing to options trading? Jordan, I think it depends on each person. It's very situational, right? So it's, some people, have a lean fire spend limit, right? They're spending $2,000 a month, and if they can do that in options trading versus real estate, why wouldn't you do it with a stock portfolio versus a real estate portfolio? We only ever do real estate because it pays us more, and in this market, it sometimes doesn't pay you more. If you don't manage your property well, you'll make less. I know people that have rental properties who don't stay on their vacancies and don't really manage it tight. If you don't manage it tight and efficiently, you'll make less from a real estate portfolio than you will from an options trading portfolio. The same is true for options though. If you just didn't sign into your account for like 2 months, you could get slaughtered, right, if you're not watching things. So you got to put the effort in either pursuit, but it's a lot less effort and a lot more flexible to do it from your phone, options trading, than it is to manage a property. My personal preference would be, it really depends, but if you're anywhere near even the 8% rule, the 4% safe withdrawal rate, I say the 8% rule with options trading, conservatively, you could draw down it and be okay. Especially if you had a little bit of an emergency line of credit set up, so you could live for 2 years. If there's a downturn, you can live 2 years living expenses off an unsecured line of credit. You have that set aside. You're like, I have an emergency, instead of emergency fund, I use an emergency line of credit. It's at like 5, 6, 7%, whatever, but it's there if you need it. And you draw down that during a recession instead of touching your portfolio. So you never sell when your stuff is down. You wait till your portfolio comes back. That's important. Are you going to do any future collaborations with Mad Scientist? He seems like he's really slowed down in his content. I like Mad Scientist. He and I have connected before, and I like his content. It's great. We share a similar viewpoint. I've also slowed down the content, so I'm not looking to actively collaborate or do anything. I've even invested money into writing a book. I paid someone to help me build a course, and it's been my fault that I haven't been following up on my to-do lists on my end. So I haven't made it a priority right now to do that. I do the weekly show, and for me, that's enough right now. Maybe when I sell some more properties off, we'll see. What's the optimal amount of debt to equity that you should have before you refinance? It depends. Ideally, you're 80% loan to value all the the time. So is it worth your time to refinance if you're 70% loan to value when you could be 80% loan to current market value? Maybe to get the extra 10% out of it could be worth it for someone. It just depends. It just depends on the person. There's no, there's an ideal. It's 80% loan to value all the time. The more leverage, the better, especially if it's cheap leverage at 1 or 2 or 3% interest. Using your own money is very, very expensive, so you don't want to use your own money. If you owned one property in cash, that's the same as owning 5 properties at 20% down. The same amount of money. You could buy 5 $100,000 properties at 20% down, 20,000, 20,000, 20,000, 20,000, 20,000. They will produce much more cash flow net of the mortgage payments than one property will fully paid off. So that's the first thing to start when you talk about leverage. Use that example. And everyone's like, oh, true. Owning real estate in cash is a terrible idea. I can own it with leverage and own way more properties and make way more cash flow. Okay, that makes so much sense. Owning one property outright is not a great return on capital without a mortgage on it. So you need that cheap debt to make real estate attractive. If you can only borrow at 10% interest, unless you're flipping or doing short-term holds, it doesn't make sense. Long-term holds at high interest rates destroy the deal. So it's dependent on cheap financing to make money in the buy and hold game. Where was I here? Would you recommend skipping university and pursuing trading full-time for someone in the early 20s for someone who's not sure what he wants to do? No, I wouldn't. You need a good amount of capital for trading to be worth it, unless you want to go work for a fund and trade with them as a job full-time. But trading on your own capital, no. Terrible. If you have less than $500,000, probably a terrible idea to quit your job and do options trading full-time. You're not going to make enough to sustain yourself and really grow. It might be enjoyable, but I don't think it's worth it for people who don't have a lot of capital. You could do it and still work a job, but you don't want to deplete your savings. You don't want to live off of all the money you're making from your options portfolio. Ideally, it's growing over time to combat inflation, right? So you gotta leave some in. And there's risk associated too. There'll be times where the market's down and you can't draw from your portfolio, or else you'll be eating into your principal. That's how you lose, is in 2008 in the recession and COVID is when you sell. That's the time you can never draw down. You got to put as much as you possibly can in the downturns. That's when you lever up all the way to the tits. That's the time to go all in. Most people are like, oh no, and they're fearful and they're pulling out in a recession, and it creates a further recession. But yeah. What if your emergency line of credit is frozen during a downturn? Is this a realistic possibility? No. Unsecured lines of credit, that hasn't happened that I've known. But you have a couple of different banks and institutions just in case. But no, I haven't known that to be true typically. If you're talking about a margin line, just because it's secured against your stock portfolio dropping, but no, typically not, is my understanding. I've never seen that happen through 2008, through all the recessions. All of mine were fully open here in Canada. So I've never seen that happen. It's a possibility. Maybe you have a bunch of different lines of credits all at different places that you can tap into. Yeah, I mean, in a situation where we're in hyperinflation, maybe I could see them maybe lowering the amount you could borrow or limiting it from 20,000 down to maybe 10 or something. But in that situation, there'll be riots in the streets anyway. So yeah, everyone, smash the like button. Thank you. I gotta go put my daughter to bed here. It's past the time, so I'm gonna wrap this up. I'll pick a couple more. What's your strategy for evading liquidation in the event of a market meltdown? So that's why you buy puts to protect your portfolio. Or if you're shorting the market, that's why you'd buy calls to protect your unlimited upside potentially as well, right? So you want to try to straddle or strangle or have a spread of some sort to protect yourself. That's key. You gotta limit your losses. Don't use too much leverage. Save your leverage for a recession. So just use your own money. And then in a recession, Interactive Brokers, you can go 3.34 to 1. So if you just use your own money to trade, and then in a recession, you can go 3 to 1, even if your portfolio drops in half, which I've never, a properly diversified portfolio has plays within it that do really well in recessions. I have stocks in my portfolio that will skyrocket in a recession. During a recession, I sell those plays that are skyrocketing, and I double down on the shit that's getting destroyed. So you just rebalance your portfolio in a recession, and that's when you use your leverage. When you're like, okay, Boeing's under $100 a share. You're like, okay, there's some real value here. There's like during COVID, there was some real value plays. That's when you use your leverage. Like, hey, even if your portfolio is half, you can still go 3 times your net liquidation value. So even if your portfolio is beat up, you go triple down using your leverage at the, when things are really depressed, all the way down. And eventually it'll be a bottom and it'll come back. It always comes back. Within 2 years, the market always recovers if you're diversified properly. So own many different positions in many different sectors. Have those plays that'll do well in recessions that you can then sell off to have cash to buy the dip. You want to buy the dips. That's the key to my strategy is pretty much just buying the dips and selling calls on the peaks. That's it. That's all I'm doing. And I'm not, I can't pretend I'm any smarter than anyone else. I'm just running a strategy, and it's been working so far. What's the normal amount of leverage you consider using under normal circumstances, Chuck asks. So typically, I'd like to see you never have less buying power than 2 times your net liquidation value. So if you had $1 million in your portfolio, you should have the 2 million buying power at any given time. If your portfolio drops to 500,000, you should have $1 million in buying power at any given time. So that's what I like to look for is 2 times my net liquidation value, like the value of my portfolio, in buying power at any given time. So that's kind of where I stay. If you're fearful that we're at the top and there might be a correction, you might want to de-lever a little bit and say, hey, maybe I'll pull back all the leverage and I'll just invest my money and I'll be able to go 3 times my net liquidation value in a recession. Those types of strategies where you double down in the recession, all the people who were bullish when everyone else was bearish, those people made hordes and gobs of money. So that's what you want to do is use your leverage in the dips. It's hard to call the dips though, right? How do you know when it drops 10%, you're like, okay, we're in a recession, but then it could drop another 10%, another 10%. So you just dollar cost average. Never blow all your leverage, right? Always keep a little bit because you never know what the bottom is. You can never call the bottom, just like you can never call the top. Anyone who says they can, they're lying. No one has a crystal ball. All we can do is look at, general trends and general probabilities and try our best to make educated small bets often in many different places. And because the tide always continues to rise, you will rise over time if you're diversified. I had to go. My wife wants me to put our dog to bed. If I missed your comment, I don't think I did. I think I got most of the comments here. There you go, Revind. That's nice. Phil, I'm not going to tell you what my net worth is. I'm doing very well. At one point on this channel, a few years back, it was much lower than it is today, and I think I did do a net worth declaration. So you could dig back, and then you could figure out that I grow at like a 50% a year rate for the last 5 years at least. So you can do your math and figure out where my net worth is today. I had 1 year where I doubled my net worth twice in a row. Anyway, so I've been exceptionally lucky and taken a lot of risk and worked really hard to get where I am, and hopefully I can continue to grow, and we'll see. I almost doubled my money on Expedia in a short time because it was beat up so badly during COVID. Yeah, I mean, there's so many opportunities during COVID, right? Thoughts on custom home building. Stay away from it. Very high risk. Unless, as a builder, you have a good set of clientele, you can make a good markup profit as the builder. But if you're trying to flip high-end custom homes, I find that there's just not a huge buyer pool for that. And the customizations could end up meaning there's no profit at all for you. I've seen it go bad for some people, but in this hot market, everything's working. So who knows what the future holds. Thank you all so much for watching. It's been a great show. I really appreciate everyone for tuning in today on my shitty old backup burner iPhone. So hopefully next week we'll have a better situation set up, and hopefully the phone's working. If you like this video, thumbs up. It's a little bit of saying thank you for watching. And if I missed your comment, paste it now, save it for a sec. Once the video uploads for playback, you can post it and I'll answer it there in the comments. You can also find me on Phil, that's low. That's low. I guess I've been going faster than I thought. That would be a disappointing net worth figure. I'd be very I would hope to have a lot better net worth than that. What was I saying? So yeah, thank you all so much for watching. I will see you next week and on Instagram at Mike Rosehart. If you're watching the playback, thank you for watching. I appreciate your attention and hopefully got some value from today. And if you did, smash the like button and leave me a comment. Say, hey, appreciated the stream. Thanks, Mike. Enjoyed this part, and leave a timestamp for someone else to find. The secret to unlocking a wealthier you is to spend less, earn more, and maximize returns on the difference. Bye, everyone. Have a good one.